Humans don't always say what they mean. Sarcasm, slang, and regional nuances make sentiment analysis tough even for humans, let alone machines. Take this headline: Bitcoin crashes again, just what we needed. Is that sarcastic, ironic, genuine praise for volatility, or imagine this: Apple's event was okay, I guess. Is okay positive, neutral, disappointed? AI systems often struggle with these subtleties, and even when they're trained on massive datasets, there's always the challenge of context. For instance, if a politician makes a speech that subtly hints at policy change, seasoned traders might catch the undertone, and AI might just flag it as neutral unless it's trained to recognize those nuances. This leads to a major limitation of current AI. It doesn't feel emotions. It only interprets indicators of emotion based on historical patterns. And markets evolve, language evolves, context shifts. A meme today might carry a different meaning tomorrow. Still, despite these hurdles, AI is getting better. Some hedge funds and quant firms already rely heavily on AI-based sentiment analysis. Take Renaissance Technologies or Bridgewater Associates. These firms invest billions and employ teams of AI researchers. They use models that factor in not just raw numbers, but social sentiment, political tone, and even satellite imagery. Retail trading platforms are catching on too. Apps like Robinhood and eToro now display sentiment indicators. Social trading is blending with machine learning, creating a hybrid approach to investing. But let's be clear, these tools don't replace human intuition, they amplify it. They provide another layer of insight. A trader might see a stock dropping, but if sentiment data shows growing optimism or insider buying, they might hold instead of sell. Conversely, if a stock is rising but sentiment turns sharply negative, they might exit early. So in a way, AI doesn't need to feel emotion. It just needs to detect and respond to its signals faster and more accurately than a human ever could. That's already happening. Let's talk about real-world examples. During the GameStop short squeeze, traditional financial models couldn't make sense of what was happening. Fundamentals were thrown out the window. But if you had an AI system that was monitoring Reddit sentiment and trading volume, you might have seen the wave coming before it hit mainstream media. Another example: Elon Musk tweets. A single emoji from Musk can move markets. If an AI model is trained to understand his tone, timing, and audience reaction, it might front-run massive trades based on his cryptic posts. Or consider the impact of global events like the COVID-19 pandemic. News sentiment dropped sharply even before lockdowns began. AI systems trained on media tone and keyword frequency might have signaled risk-off behavior before markets fully reacted. These are not hypotheticals, these are the frontier of AI-driven trading, but there's an ethical side to all this too.